Welcome to Easy Guides, step-by-step information. Please subscribe and hit the notification bell button. How to lower business debts and bills. 1. Assess your current financial situation. Review financial statements. Gather your balance sheets, income statements, and cash flow statements to understand your current financial position. For example, you may find that your business has significant debt and outstanding bills that need attention. Identify debts and bills. Make a list of all outstanding debts, including loans, credit cards, and unpaid bills. For instance, you may have a high-interest business loan, multiple credit card debts, and unpaid invoices from vendors. 2. Create a budget. Categorize expenses. Divide your expenses into categories such as rent, utilities, payroll, inventory, marketing, and maintenance. For example, you may identify that you're spending a significant amount on marketing or office supplies. Analyze each expense, review each category, and identify areas where you can potentially reduce costs. For instance, you may find that you can switch to a more affordable supplier for office equipment or negotiate better rates for utilities. 3. Prioritize debt repayment. Identify high-interest debts. Determine which debts have the highest interest rates and focus on paying them off first. This strategy helps minimize the amount of interest you'll ultimately pay. For example, you may have a credit card debt with a high interest rate that needs immediate attention. Debt avalanche method. Allocate extra funds toward the debt with the highest interest rate while making minimum payments on other debts. Once the first debt is paid off, move on to the next highest interest debt. For instance, if you have multiple credit card debts, pay extra toward the one with the highest interest rate while making minimum payments on the others. Debt snowball method. Arrange your debts in order from smallest to largest regardless of interest rates. Allocate extra funds to the smallest debt while making minimum payments on the others. Once the first debt is paid off, apply the payment amount to the next smallest debt. This method provides a psychological boost as you see debts being eliminated one by one. 4. Negotiate with creditors. Contact creditors. Reach out to your creditors and explain your financial situation. Ask if they are willing to reduce interest rates, extend payment deadlines, or offer a payment plan that suits your needs. For example, you can contact your loan provider and request a lower interest rate or an extended repayment term to ease your financial burden. Provide documentation. Prepare supporting documents, such as your budget and cash flow projections, to demonstrate your commitment to repayment and your ability to meet negotiated terms. This can help you negotiate more effectively with your creditors. 5. Explore refinancing options. Research refinancing opportunities. Look for lenders or financial institutions that offer better terms and rates than your existing loans or debts. For instance, you may find a bank that offers a lower interest rate for business loans, allowing you to refinance and save on interest payments. Consolidation loan. Consider consolidating multiple debts into a single loan with a lower interest rate. This simplifies your repayment process and reduces the overall interest you'll pay. For example, you can consolidate your credit card debts into a single business loan with a lower interest rate. Alternative financing. Explore alternative financing options such as business lines of credit, peer-to-peer lending, or small business administration loans. These options may provide more favorable terms or lower interest rates. 6. Increase revenue streams. Evaluate existing products and services. Assess your current offerings and identify opportunities to enhance or expand them. For example, if you offer consulting services, you may consider offering additional training programs or workshops to generate additional revenue. Target new markets. Identify untapped customer segments or geographic areas that align with your business's products or services. Develop marketing strategies to reach these new markets. For instance, if you own a bakery, you can target local coffee shops or restaurants as potential wholesale customers. 7. Decrease expenses. Supplier negotiations. Review your relationships with suppliers and negotiate better terms, discounts, or bulk purchasing options. For example, you can negotiate with your office supply vendor for better rates or explore bulk purchasing options for inventory items. Energy-saving measures. Implement energy-efficient practices such as installing LED lights, optimizing temperature controls, and using energy-saving appliances. This reduces utility costs over time. For instance, you can switch to energy-efficient lighting solutions or install programmable thermostats to reduce energy consumption. Streamline operations. Identify inefficient processes and streamline them to minimize waste and maximize productivity. Look for areas where automation or technology can help reduce costs. For example, implementing a cloud-based accounting system can streamline your financial processes and reduce administrative costs. 8. Monitor and manage cash flow. Build an emergency fund. Allocate a portion of your budget to create a cash reserve for unexpected expenses or periods of reduced income. This ensures you have a cushion to rely on without incurring additional debt. Improve invoicing and collections. Establish efficient invoicing processes and send reminders to customers for timely payments. Consider offering incentives for early payments and implement stricter credit policies. For example, you can offer a small discount to clients who pay their invoices within a shorter time frame. Optimize inventory management. Analyze your inventory levels and ensure you're not overstocking or carrying unnecessary items. Implement just-in-time inventory practices to reduce carrying costs and improve cash flow. 9. Seek professional advice. Financial advisor or accountant. Engage a professional who specializes in business finances to provide guidance on reducing debt and managing expenses effectively. They can help you create a tailored plan based on your specific situation. For instance, a financial advisor can analyze your financial statements, assess your budget, and suggest specific cost-cutting measures or debt repayment strategies. 10. Stay disciplined and review progress regularly. Stick to your plan, follow your budget, debt repayment strategy, and cost-cutting measures consistently. Avoid unnecessary expenses and remain committed to your financial goals. For example, track your expenses regularly and make adjustments as needed to stay within your budget. Regular reviews. Monitor your financial statements regularly to assess progress. Make adjustments to your strategies as needed to optimize your debt reduction efforts and improve financial stability. For instance, conduct monthly or quarterly reviews of your financial statements to evaluate your progress and identify areas for improvement. Remember, these steps provide a general framework, and it's essential to adapt them to your business's specific circumstances. By implementing these strategies and maintaining financial discipline, you can gradually lower your business debt and bills while improving your overall financial health.